So there you are, making some progress in your trading, feeling like you're doing things right, but then all of a sudden you blow an account. Have you ever been in this situation? Well, I can tell you right now, if you clicked on this video, then you probably have blown an account or you have experienced losses in your trading account and gotten very frustrated with trading now or sometime in your past. In this video, I'm going to talk to you about why most people blow accounts, how you can avoid blown accounts, and just some tips that you should think about if you're going to be trading Forex seriously. So many traders, you are not alone. The first thing you need to understand, if you are sitting here and you're frustrated or discouraged by your trading, everyone blows their accounts. People, it doesn't matter. Almost everybody that I've ever met in trading, they have blown an accounts, they have made mistakes, and they have done things to do so. So what I'm going to try and do here is I'm going to try and outline some of the key things that cause people to blow their accounts. And then I'm going to outline some ways that you can avoid doing this. So the common ones that I can list off are the biggest one, over-leveraging their account, okay? And many of you probably know what this means, but some of you might not realize that you're even doing it. So over-leveraging is going to be our first one. The second one is psychology, because let me tell you what, this is a fancy word, but sometimes when you get really mad or you get really frustrated with trading, you can tend to make some very stupid and very, very rash decisions that can end up blowing an account. In fact, these two go hand in hand because oftentimes people get mad or get frustrated, and that often leads them to over leveraging and blowing their account. So those two kind of go together. And the third one is no plan. Okay, and this is probably all three of these are very common, but this one is probably the most common in my view, is people have no plan in their Forex trading or their approach to investing in general, and they basically end up blowing an account with no proper approach. Okay, so let's talk about the first one. The first one is going to be over leveraging, and this one is pretty straightforward. As a Forex retail trader, we have a lot of options, especially if you live outside of the US and the UK. There are some brokers out there that allow you to leverage something like 500 to 1 or even plus, right? Even more. Some offer 1,000 to 1. And this leverage to new traders sounds really, really cool because you're thinking, oh, so I could take my very small account, let's say it's $500, and I could trade it as if I had $50,000. So to new traders, this is very, very attractive, right? So this is what a lot of times gets new traders interested in Forex, is because they hear, hey, I can trade my small account, but use leverage to basically give me the chance to trade a larger account. And I'm going to just be honest with you, this is a complete trap, okay? This is a very, very dangerous thing to consider when looking at Forex. So many people jump into Forex because of leverage and because of the ability of this, but I'm telling you that this is a trap, very often used by brokers and by all sorts of different entities to try and get traders involved, right? Brokers want you to trade on their platform. They make spreads and commissions and all sorts of things from you actively trading the markets. And so they'll give you this high leverage to attract traders to make themselves think that, hey, I can make a lot of money from this in a short period of time, even though I only have $500. That's a big trap. So like I said, I think that most, all new traders, when they first get involved, almost all of them are attracted to leverage. And so over leveraging is a very easy to do concept because remember, the brokers, like I said, they want you to use that high leverage just because that racks up the fees for them. That makes them more money. So a lot of times what traders accidentally or on purpose do is they take positions that are too big and are almost certainly going to wipe out the account over time. Because if you take a position and you say, oh, I'm going to take my $500 and it does really, really well, and you make $1,000, you make your account turn into $1,000. You sit there and you're like, I made 100% on my money. I'm doing amazing. I am the best trader ever. And then what tends to happen is that inevitably you keep over leveraging and that money goes to zero. It doesn't really matter if you make quick money overnight. If you continue to trade like this, you are almost certainly going to blow accounts. And this is probably, I would say it's probably number one or number two in the form of things that blow accounts. People trade with too big of a size. It ends up making them, think I can turn my small amount of money into a large amount of money. Look at how good I am. And then inevitably it ends up with them blowing the account back to zero. So this is no bueno. This is not what we want to be doing if we're going to be trading successfully. So what I would say here is that the quickest resolution to this is to learn about risk management, okay? And this is a topic that I talk about quite often on my channel. It is probably the most important concept in trading in my view. And risk management starts with risking not big, but risking small, right? Small positions. Because let's think about this for a second. You are way less likely to blow an account risking a small portion of your account than you are if you use big, huge lot sizes, right? So if we want to avoid blowing accounts, which is the whole point of this video, the first thing we need to say is, let's not worry about making our money turn and double, triple, quadruple, all that really quickly. Let's worry about keeping our accounts safe so we don't blow another one, right? So to do that, we got to be risking small with risk management. So again, I've got videos on that topic if you want to learn more about risk management. If this is what you struggle with in your trading, over leveraging, highly encourage you to watch some of my videos on that. But generally speaking, I am looking at risking small, something like 1% or less on each trade. Right? I'm looking for, I'm looking to take the very best setups only. I'm looking for positive risk to reward, right? Some things there in terms of risk management that we would want to be doing instead of over leveraging our account. Some examples of people who are doing the wrong thing, in my view, are risking, 20% of their account on a trade or 10% of their account on a trade. You might say, well, Nick, that doesn't sound like too much. We're just risking a small portion. But the thing here is that losing streaks in trading are inevitable as well. And if you're risking 10% per trade and you lose 4 trades in a row, 4 trades, right? At 10% each time, it's going to be really bad. It's not going to be quite 40% because the math doesn't quite work out, because each time, your drawdown is going to be, your first loss, minus 10%, minus 10, minus 10, minus 10. It's not exactly 40 when you keep doing a proportion to your account and risking 10%, but it is pretty dang close. And it's really hard to recover when you lose just 4 trades at 10% apiece. So this is going to knock us out of the game. This is going to be really bad. This is just not what we want to be doing. So again, risking small gives us way more flexibility and way less likelihood of blowing an account. It would take a lot of effort to blow an account, risking something like only 0.5% or 1% on each trade. Okay, the next one is psychology. This one's a big one. I think that retail traders or just traders in general, we are human beings, right? And so we get frustrated and we get impatient. Again, what I just talked about may have scared some people off of the video. So if you're still here, then awesome. Thanks for being here. A lot of people are impatient. They don't want to hear risking small and making small gains over time. That doesn't sound exciting. That sounds really boring, and like trading might not be worth doing it, right? It's too much work for too little money. And to be fair, honestly, that's for if you don't really enjoy trading and learning about trading, it probably is not a good way for you to spend your time to make money in the short term. Long term, it can be excellent, but short term, if you're impatient with this stuff, if you're looking to make money in a short period of time, you're better off getting a job or a second job or spending time doing something that is more practical for you. So that's just my honest opinion here on I don't make any money telling you guys that. I'm obviously a foreign exchange trader myself, and I also create content here on YouTube. So I don't want to tell people stuff that makes them uninterested in this, but this is the truth, and that's what I give you guys on my channel. So a lot of people are impatient with trading, and that's why they quit. That's why they blow accounts, is because they have this frustration when things are not going well. They're impatient when they want to make more money, right? So they get angry, right? So they might even further than just being frustrated with a situation, they might actually act on it and do something stupid. And this brings us back to that blown account concept. A lot of times anger and, frustration and impatience, they lead into blowing accounts because that leads them to say, well, screw this, I'm going all in, right? They throw all their chips on the table, and what happens? They blow the account, right? So that's the psychological side, and it's a very frequent, very common thing for people to get angry and not be able to stick to their plans. Speaking of plans, that brings me to the last one, no plan. You would be surprised. I bet you some of you guys who are watching this video are trading Forex with no plan. And what I mean by a plan is like a written, sort of like business plan. If you want to treat trading like a business, right? Every good business has a plan. Businesses have plans, okay? Trading is the same way. If you're going to be treating trading like a business, you should have a business plan or a trading plan. And you guys would be surprised. I'm telling you, some of you guys are like, Nick, I already have a plan. This is obvious. But I'm telling you, so many traders out there, they don't have a trading plan. They just go with the wind. They buy the Euro USD when it looks good, or it's breaking the trend line, I'll short here, right? Everyone, who comes into this game, they think that having a plan is sort of overrated. But I'm telling you, if you don't have a strictly written out trading plan that you have tested and spent time, back testing and spent time, refining and figuring out the best principles to be using in that trading plan, I'm telling you, this is a huge lead to blowing an account because, again, you're almost inevitably gambling if you don't have a strict trading plan. And if you're gambling, as we know with gambling over time, it is almost certain that you lose all your money, right? So no plan equals gambling equals blown accounts. So how do you have a trading plan? What's the steps there? Well, I've got concepts on this that you can check out on my channel as well. But generally, you want to take into consideration risk management. You want to take into consideration the back testing of your strategy with well-defined entries, exits, etc., etc. These are things that you need to think about if you're going to be taking trades with your hard-earned money. You guys work hard for your money. I'm sure you do. I do myself. It's not something that I just want to throw at the markets and give it away to those bazillionaires on Wall Street, right? I would much rather trade with a plan that over time, theoretically, will make me money, not lose me money. So that is the thing. And again, a lot of traders, they're trying to, make money very quickly. They want to make big money in a short period of time. So here's where generally traders fall. Most traders, they try and make money big time and it ends up blowing to nothing, right? Maybe they even have a good run. Maybe they make some money in the short term. Have any of you guys ever been in a situation where you turned a small bit of money into a lot of money and then lost all of it? That is actually more common than you think. A lot of people think that they're hot and that they think that they're, big stuff when they make a quick buck on the markets and then they lose it all the next week. This is actually fairly common, and this is a little bit of luck, but most traders either do this, or they just do this, right? And unfortunately, that is the majority of traders. But if you have the patience to stick around on my videos and to watch the concepts that I share and to go do the back testing and do the hard work that nobody wants to do, I'm telling you, you can start to produce performance that looks like this. It's not super sexy. It's not super amazing and beautiful. It's not, the Mona Lisa or anything like that. It's just boring, steady returns. And it is possible to do this in the markets. This is something that I strive for myself, but it's not exciting. It's not flashy. It's just steady, slow overall returns in the market. If you want to do that, then stick around on my channel. Make sure to hit that subscribe button down below. Thank you very much for watching today's video. If this was helpful to you, make sure to share it with a friend, hit that like button, subscribe to the channel, and we'll see you back in the next one.